We all know NIO as a battery swapping electric vehicle emerging startup company based out of China, but this company is so much more than just what meets the eye. In a similar fashion as Tesla slowly over the course of more than a decade became the most valuable automaker by market capitalization in the world, NIO could very well be on the same trajectory. There are many signs that point to this potential eventuality. I've been following this company since $3 a share and first told my subscribers to buy in at $7. In my opinion, we are nowhere, and I mean nowhere near done. In today's episode, we're going to be going over NIO's secret plan with billionaire Li Bin at the helm, some major signings giving indication to the future narrative, why I am continually investing in this company moving forward, and why I see them dominating the market. It is NIO's day to win the Chinese landscape and ultimately across the globe. Before we get to it, Webull is giving out 2 free stocks worth up to $1,850 for free. You can trade before and after hours markets. They are 0% commission. It really is a win-win. This one ends soon, guys. You do not want to sleep on it. Check out our Patreon page for more content under the radar stocks behind the scenes. This also gains you access into our exclusive Discord channel. This is where you can see all of my trades in real time. The chat is always popping off. You do not want to miss any of it. Alright gang, let's get right into it. NIO has risen to fame and spotlight over the course of last year, surging more than 1,400% in this time. They have accumulated a whopping market cap of $68.70 billion. Now, it's clear that consumers, governments, and above all else, vehicle manufacturers are more than aware of the trajectory of the industry eventually towards a complete EV worldwide fleet. This is less and less a possibility and becoming more a reality. We have seen a sharp rise in electric vehicle sales globally. We are now seeing countries selling more electric vehicles than traditional gas and diesel. Norway saw 54.3% of all vehicles sold last year battery powered. This is a trend only gaining steam. Governments are increasingly deploying subsidies to incentivize consumers to turn towards battery powered vehicles to meet carbon emission regulations, to reduce pollution, increasing human health, and decreasing hospital chronic care expenditure. We see China taking an early lead on this massive incentivization, and NIO being an early emerging leader in the space, extremely well positioned. Now, what makes NIO so interesting is that they are attacking the Chinese EV market with a relenting ferociousness and aggressiveness. They have been pouring billions of dollars into their operation to expand, build, promote, and carve into other automaker markets as quickly as possible. In this way, competitors only realize how game-changing their technology and business operation is once it's too late. Now, before we get to some recent signings and news within the NIO sphere, I want to talk about why their battery swapping technology is going to revolutionize this company. With the introduction of their battery swap 2.0 tech unveiled at their annual NIO Day event in early January, the system is able to host 13 batteries and swap up to 312 batteries per day. Vehicles with the touch of a button automatically drive into the station and in under 5 minutes leave with a completely new, fully charged battery. NIO is planning on building a strategic and extensive infrastructure system across China and deploying 500 stations by the end of 2021, increasing brand awareness, market share, and dominance within Chinese cities. Now, unlike a plug-and-charge method that other automakers use, in this format, the battery itself is changed. This opens up a multitude of benefits. NIO will be able to fundamentally outcompete other vehicle makers with fixed battery systems in that their vehicle resale value is kept relatively largely intact, with the most expensive pound-for-pound major component of the vehicle new and vitalized. This also outcompetes competitors in offering users increased transparency and customization into their battery system. Users can opt into NIO's famed BaaS or Battery as a Service platform, in which consumers pay a monthly fee to rent their battery. This is simultaneously able to lower the barrier to entry point, allowing more users to enjoy a premium luxury electric vehicle and maintain resale value. NIO recently saw 55% of owners currently subscribe to BaaS, and this is only growing. They are also extending this subscription service to their software, implementing autonomous driving as a service, even further increasing user choice. Now, NIO has been in recent talks with the Chinese gas and oil giant Sinopec. NIO's first 2.0 station is expected to be unveiled at a Beijing Sinopec gas station on April 15th. I do think a partnership between between the two growing powerhouses will be inked in the coming months. As NIO can't rely on third parties as other plug-and-charge companies can to mitigate infrastructure strain, partnering with companies to aid in the deployment of an extensive swapping infrastructure will greatly increase their reach within China. Greater reach equals more vehicles sold, which brings us to our next point. NIO has very strong ties with the Chinese government, which has, in the past, essentially saved the company from full-out bankruptcy. When NIO was cash-strapped, struggling to stay above water in 2019, the buyout deal from local authorities in Hefei, Anhui Province, China, saved their company. The local authorities took around a quarter ownership of the company and formed a separate company termed NIO China. Now, as NIO has been growing and recovering and building a robust cash position, they have been purchasing back the company from the government, now owning more than 90% and exposing investors to 90% of the market capitalization. The partnership between NIO and the government continues. We see this in the deployment of swapping stations, maintaining subsidies to their vehicles while cutting subsidies to almost every other luxury brand because they do not have removable batteries, and jointly building production facilities. We see that there is a dual incentive to ensure that NIO not only survives but thrives. NIO has commenced a production facility in Hefei in an industrial auto park with capabilities 300,000 vehicles per annum under 2 shifts. Simultaneously, NIO also has plans to increase their output on their pre-existing factory with their partners at JAC Motors. This increase is expected to be around 150,000 additional vehicles from their already intact 150,000 vehicles per annum. This brings NIO's total vehicle output to 600,000 vehicles in early 2022. However, CFO Stephen Feng sees a total addressable market worldwide closer to the 700,000 mark. This perfectly lines up with the release of their first sedan, the incredible and sleek ET7, which I think will do numbers in China. This vehicle will be outfitted with their 150 kilowatt-hour battery cell pack, enabling up to 1,000 kilometers NEDC range. We see the consumer moving towards smaller vehicles on a continual basis, and I think this will only increase. Using both battery as a service and their newly implemented autonomous driving as a service, consumers will receive more flexibility and the barrier to entry point will be lowered. This is an advantage and a luxury that NIO has that other companies do not. This will enable them to systematically squeeze out competitors in the coming years. There are also talks that other vehicle manufacturers will begin outfitting their own vehicles with swappable batteries, as proof of concept has been clearly shown by swapping leader NIO. It's important to note here that NIO accepted a huge risk load, going extremely far into debt on their onset to build this extensive swapping infrastructure without first having vehicles on the road. This is, of course, the only feasible way. However, now that this infrastructure is available and growing at an increased rate, it is expected that many automakers unwilling to accept the same risk will simply outfit their vehicles in compliance with NIO's pre-existing technology. I do think NIO Power, NIO's swap division in the coming years and decades, will inject an increasingly larger proportion to their bottom line and is a complete dark horse in their operation currently. Now, I fundamentally believe that almost everything NIO has done leading up to this point has been done to fund their future operations, and I'll get to what I mean. Now, when beginning operations as an emerging electric vehicle manufacturing company, we typically see these companies start with high margin, luxury, expensive vehicles on low outputs. These vehicles are typically larger in size, SUVs of some sort. This is done in contrast to building in mass production with lower margins, as this is much more difficult and takes time to build up. We saw NIO begin rolling out their largest vehicle, the ES8, and move to progressively smaller vehicles on each unveiling. Their next similar yet smaller ES6, then the even smaller SUV coupe EC6, and then finally their smallest, their sedan, the ET7. In this way, their earlier first-gen larger operations are almost solely in place to fund future operations of ideally a mass-produced and high-selling vehicle. Now, NIO has come out and stated that they do not intend on moving completely away from the luxury sphere. However, they have recently been hinting that this may not always be the case. Tesla has recently announced their first vehicle firmly within the economy market, with pricing at $25,000 and sometimes termed the Tesla Model 2. This is expected to dominate in the Chinese arena. I think NIO is planning on attacking this head on. Like I said, I do see NIO staying firmly rooted within the luxury sphere and increasing their brand equity. However, in a similar regard to how Tesla has dominated and slowly and quietly moved into the economy sphere while still building beautiful and high-end performance vehicles, I see NIO doing the same. They are also seemingly moving to become vertically integrated in the coming years. They have formulated a company with their partners at JAC Motors termed Zhonglai in a joint venture. This company is to quote deepen the cooperation in manufacturing and supply chain management. I think this is indication of NIO's quest to become completely vertically integrated and begin insourcing in the coming months and years. This would increase their already strong vehicle and gross margins, currently sitting at 17.2% each. The company is moving into the international stage, likely taking on the fierce battleground country of Norway, where all the action currently is. With a potential output capacity of 700,000 vehicles in the coming year, the release of their new sedan, the ET7, with 1,000 kilometers NEDC range capabilities, further implementation of battery as a service and autonomous driving as a service, increased autonomous driving technologies, 500 battery stations with many being 2.0 going live, and potentially moving into the economy sphere. I do think this company will win the day in China along with Tesla. There is plenty of market share for both companies, and I see both dominating. I do expect shares to be trading in triple digits within 2021, and I am continually purchasing shares of this company. They are continually moving ahead of other companies within the EV sphere, and I think this will only escalate within China and worldwide. Anyways, everyone, let me know, are you buying, selling, holding? What do you think of NIO? Don't forget about the Webull promo, 2 free stocks worth up to $1,850 for free. You could trade before and after hours markets. They are 0% commissions. It is a win-win. You cannot go wrong. Check out our Patreon page. There's behind the scenes more content under the radar stocks, and this also gains you access into our private Discord channel. The chat is always popping off. There's great tips and tricks. You do not want to miss any of it. Anyways, I will see you all in the next video. Take care. Happy trading. Cheers.